Hello everyone, and welcome back to our next episode. In the previous episode, we shared two cautionary tales. One about Mr. Sharp's own personal experience of going bankrupt in 2004 due to excessive leverage, and the other about the Reddit user who correctly predicted Nvidia's future but lost everything for the same reason. Both stories hold up a mirror to our most primitive and powerful enemies as investors ourselves. Our decisions are often driven by two ancient emotions: greed and fear. These are instincts woven into our genes over millions of years of evolution to help us survive the perils of the wild. But in the modern jungle of finance, they often lead us to destruction. Today, we'll discuss how, after recognizing these ineradicable human weaknesses, we can, from Mr. Sharp's perspective, tame this inner beast by establishing a proven investment discipline and system, ultimately becoming the winner in the long run of the market. First, let's talk about fear. We often underestimate the destructive power of fear. Greed can send you back to the old days overnight, but fear can cause you to miss out on an entire era. My father-in-law is a case in point, an investor whose life was imprisoned by fear. At the peak of the dot-com bubble in 2000, he believed all sorts of stories and chased those hot tech stocks. Then, when the bubble burst, he suffered heavy losses. This experience left a deep scar on him. From then on, until his death 23 years later, he never bought a single stock again. He placed all his savings in large denomination bank certificates of deposit. These certificates offered extremely low returns, barely even beating inflation, but he felt that this was the only way to sleep at night. I tried many times to persuade him, even to invest in the safest index funds or allocate some gold and silver to hedge against currency devaluation, but he steadfastly refused. The burn he suffered in tech stocks left him with post-traumatic stress disorder, PTSD, regarding the entire capital market. His story teaches us that the most terrifying consequence of a crushing failure isn't the money lost, but the potential loss of all future opportunities. Fear can paralyze investors into a state of learned helplessness. So, how do we overcome this fear? The answer isn't to pretend it doesn't exist or to avoid the market altogether. Instead, through rational asset allocation, we can build a portfolio that allows us to sleep soundly regardless of market conditions. This is the core system I later developed to combat human weakness. You could call it the core satellite strategy. After experiencing that coming-of-age experience of seeing my account wiped out, I learned my lesson and completely changed my investing approach. I clearly divided my portfolio into two completely separate parts with distinct rules. 85% of my core holdings. This is my fortress of wealth. Think of it as the homeland and granary of your investment portfolio. I invest the vast majority, approximately 85% of my funds in stable, core assets that I'm willing to hold for 10, 20, or even longer years. These assets typically possess the following characteristics. Strong moats. For example, industry leaders like Apple and Microsoft boast strong brands and ecosystems. Or they have broad market representation, for example, low-cost index funds like the S&P 500. Buying into them is like buying into the long-term growth of the U.S. economy. Optimally, they possess enduring value. For example, hard currencies like gold have served as a store of value for thousands of years in human history. My investment philosophy for these assets is to pursue slow, steady, and highly certain long-term compounding, rather than short-term high returns. The goal is to ensure steady and sustainable growth of my wealth. This fortress provides me with the confidence to brave market fluctuations. 15% satellite position. This is my speculative paradise. Now let's talk about how to calm our restless, quick-get-rich-quick greed. I admit that deep down, I still have that urge to pursue high returns. It's part of human nature, and suppressing it will only lead to a more severe backlash. So, I've created a strictly controlled playground for it. I allocate no more than 15% of my funds to high-risk, high-potential reward speculative investments. This playground can be anything, for example, options trading, which I consider a smarter leverage tool than margin trading because your maximum loss is locked in as the premium you invest. Certain small-cap growth stocks, startups that could become the next Nvidia, but could also go to zero. Or cryptocurrencies. An emerging field rife with opportunities, but also with scams. The principle of investing in this area is, any mistakes made, any losses incurred, must never in any way jeopardize the safety of my 85% fortress of wealth. Asterisk. And the success of this system relies on one absolute, unbreakable rule. Never, ever withdraw funds from your fortress to shore up your losing playground. If your speculative investments perform well, letting them grow naturally is great. It can significantly increase your total return. But if you lose money in paradise, don't double down on your long-term savings just because you're unwilling to accept the loss and want to recover. This is a common mistake made by most people eager to recover their losses after gambling. This strict firewall is the lifeline that separates rational speculation from destructive gambling. It provides a safe and bounded arena for your greed, thus protecting the majority of your wealth from being destroyed. As the saying goes, people can never teach people, but they can always learn things. So, I believe, some mistakes are inevitable, but they must be made early. I want to conclude today's sharing with a plan for the future. I plan to give each of my children $100 and let them trade on their own in the near future. My goal is clear, even a bit cruel. I want them to lose most of this money, because I know that the profound lessons about risk, greed, and fear they learn early in life with just $100 will be more valuable than any tangible wealth I leave them in the future. The sooner you pay the tuition for this essential investment course, the less expensive it will be. Finally, for everyone listening, I offer what I personally believe is the most practical and effective advice. Keep an investment journal. You don't need any complex tools. A simple Word or Google Doc will do. Before you make any important investment decision, whether it's a buy or sell, spend 3 to 5 minutes writing down the following simple questions. Why did you make this decision? Was it based on thorough research or a piece of news? What were your expectations? How much return did you hope to achieve over what time frame? What were your emotions at the time? Was it excitement, greed, panic, or anxiety? Then, every quarter or 6 months, spend an afternoon reviewing your journal. This simple action is fascinating. Like a high-definition mirror, it clearly reveals the irrational shadows driven by fear and greed behind all your decisions. It can help you objectively understand your true self as an investor, constantly identify and correct your behavioral biases, and ultimately become a more mature, rational investor, one better able to navigate bull and bear markets. Remember, the essence of investing is never a battle between you and the market, but a battle between you and yourself. Conquer your impulsive, greedy, and fearful self, and let time take care of the rest. The above is my personal opinion. Thank you for your company.